Right now in Medina, Washington, canceled listings have more than doubled compared to last year. Over in Redmond, home prices are up 11%, but almost 30% fewer homes have actually sold. And in Kent, Washington, a market that's never been part of the high-tech boom on the east side, prices are up and homes are selling faster than they were a year ago. So what's going on? This month's real estate data is not just telling us a comprehensive story about everything and everyone kind of following the same pattern. Quite the contrary, there are a lot of different storylines going on here. And once you see why, I think the whole picture will make a lot more sense to you. If you're new here, I'm Realtor Emily Cressey with HomeProAssociates.com. And every month I pull the latest numbers straight from the Northwest MLS here in the Seattle area, so you don't have to dig through them yourself and interpret them. We are covering Seattle, King County, Snohomish, Pierce, the east side cities, looking for stories and trends that can help inform you, whether you're looking to buy, sell, or invest, about what is going on here with Seattle real estate. This month, the raw numbers only tell about half the story. So there's a lot going on in the Seattle area and Washington state. If you've been following the news, we have new taxes coming into play, tech layoffs, and shifts about just kind of whether people feel secure in their jobs and those types of things. So if you're thinking about buying or selling a home anywhere in the greater Seattle area, stick with me. And if you want to talk through what any of this means for you specifically, my booking link to have a call together is right below this video, down in the description and the comments. So let's start with the big, boring number, the ones that actually matter. And I think the story here this month is really about inventory. Inventory is the number of homes that are for sale, and inventory is up. Homes for sale in Seattle climbed 20% year over year. King County is up 25%. Snohomish County is up 6%. And even Pierce County down by Tacoma, which usually moves more slowly, has a 14% increase in inventory. And so what does that mean for us, right? Inventory means buyers have more choices, and it's pushing the months of supply, which is how long it would take to sell out of homes if everyone stopped listing and we just bought what we had out there at the current rate. It would take 4 to 5 months to sell out of homes that are already listed and already on the market. Currently considered a balanced market, but I would say it's definitely leaning toward buyer's market territory, although that is still different place by place, home by home, and we do still have homes selling relatively quickly. So now let's head over and look at what's going on the east side of Lake Washington and see what is happening in that neighborhood. Bellevue's median home price is down 3.6% from last year, where it used to be going up like 17% a year. It's down a little bit. Kirkland is down 4%. Renton at the south end of the lake, they're down almost 8%. And months of supply on the east side is running higher than the county average as well, closer to 5 or 6 months in Bellevue specifically. Now, Redmond is the area that's not following the pattern seemingly, and it made me scratch my head a little bit trying to figure out what was going on over there. If we look at Redmond, we see that the median home price here is actually up 11%, which is the strongest gain of any of the cities that I tracked this month, which sounds great, right? Except why is that happening? Closed sales in Redmond are down 29%, pending sales are down 20%. So my read here, my hypothesis is that Redmond has a lot more new construction hitting the market than Bellevue and Kirkland right now. And new construction always sells at a premium, and that could be pulling the median price up there even while actual sales, especially if we're looking at resales of existing homes, is slowing down just like everywhere else on the east side. So what's going on with the east side? What have you been hearing? What is your hypothesis? I'd love to know. If you want to put your thoughts in the comments. Here's why I think the east side is cooling faster than the rest of the map, and that's because data is showing that this softening is happening at the exact same time as a few other things that I've been talking about. One is that Washington passed a new income tax, calling it the Millionaire's tax, right? It's illegal. They're trying to pull it back. But when that passed, a lot of high-end people making over $1 million a year whom this would affect started thinking about leaving town because they do not want a big income tax, right? And they're afraid nobody else is going to want it, and the luxury house market is going to soften as a result. People are reporting is that homes priced at $2 million or more jumped 65% year over year, the number of homes selling. Sellers moving, get out of Dodge before this tax change comes through. A lot of them live on the east side, which has been the most expensive area in the state for the most part for the last few years, right? So at the same time, this has been a tough year for the tech industry overall. We've seen tech layoffs across the board, and that's where a lot of the people that were living on the east side were working, and they were getting all this money from their tech job to buy these expensive houses, right? But we saw this year that Amazon cut over 2,000 positions in Washington this spring, more than half of them in core product and engineering roles, and that was split between Seattle and Bellevue. Facebook Meta cut roughly 20% of its local workforce. Microsoft just announced almost 500 more cuts in Redmond, effective in September. These are headlines. Obviously, none of it proves that that's what's causing the housing slowdown or contributing to it, but the timing and the geography line up awfully well. So I think it could be related, but my evidence is more anecdotal in talking to people and hearing what's making people move, how my friends in the tech industry are feeling, and so forth. And of course, in the ultra high-end neighborhoods like Medina, Clyde Hill, Yarrow Point, right, sale prices are still climbing on paper, but underneath that, buyers are negotiating really hard there. We're seeing a lot more canceled listings, and the percentage that sellers are getting versus their asking price has dropped several points. Homes priced right and that show well are still moving in about 3 weeks, and that's actually fairly strong, especially for ultra luxury. Aspirational pricing, where you're above $5 million, is where things are getting stuck. So if you're selling a $5 million home and you need a little help, just let me know. Now let's talk about Kent, because Kent down south is the interesting piece of the puzzle that doesn't fit, but maybe tells a little bit of a different story. I think of it as a little bit more of an affordable area, a little bit more blue collar. It's never been a tech hub, and its buyers aren't as tied to Amazon or Microsoft stock options and severance packages. So Kent's numbers this month look almost nothing like Bellevue's. Median price is up 11%. Days on market is down. Homes are selling 7% faster than they did a year ago. The dollar volume is up. Homes are still hitting their full asking price. And if tech anxiety were just a story that I made up, Kent should be slowing down right along with it, but it's not. So I want to say something here because I think it matters more than any chart on the screen. I know a lot of people who work in tech personally, and even the ones who still have their jobs are on edge. They feel like things are changing from the software engineering that they've always done to having AI do it, or to offshoring that to workers who live in different countries. So even if they are employed and they do have their jobs, I don't think they feel as secure to go forward and go out moving and buying big new homes and things like that. Just a little behind the scenes baseball of what I'm seeing, but again, it's a very limited sample, so I'd love to hear what you are seeing in your experience. And if you are one of those people and you are wondering whether now is a smart time to sell, to buy, or to wait things out, that's a conversation worth having on a telephone call. And I would love to, again, meet with you. You can book an appointment with me on Zoom using the link below, or shoot me a text and we'll set something up on the phone. Price per square foot is down almost everywhere I track this month, even in cities where median home prices went up, which tells you you're getting more money, you're getting more square footage for your dollar, basically. Days on market climbed across the board as well, although most areas are still in the 12 to 18 day range as far as how long it takes to sell, which is not very long. It's very fast by any historical standard. It's just slower than what we've seen here, especially in the past couple of years that have been so frenzied. Seattle's office market is also part of the story. You may have heard downtown Seattle's office vacancy runs somewhere between 25% and nearly 40% of all office space being empty. So people are renegotiating their leases at a lower rate. They're giving up office space as people are working from home. We're losing businesses, we're not gaining businesses. Depending on how you measure all of this, the city may have lost about $15 billion in office building valuations since 2020, when we had all the cranes and everybody was building everything down here. Bellevue's office is struggling a little bit. Vacancy there sits around 23%, and that gap probably matters for which side of the lake recovers first. So obviously, we want a healthy economy and jobs to support the real estate market. So if you are a home buyer, what this means for you is that you have a lot more room than you had for the past couple of years, especially if you want to buy something on the east side. But room to negotiate doesn't mean that every lowball offer will work. I had clients this year come in with an offer that was about 10% below asking on a home in Woodinville. The sellers would not even counter us on paper. The gap was too wide for them to respond in writing, and we decided not to renew it with a higher offer. It ended up selling to someone else who I presume maybe only offered them 5% under asking. But if you are going out there to negotiate really hard, be ready to have the seller push back. They won't take all of those. They're not giving away homes. If you're feeling nervous about your job, that's worth talking through with your manager or HR or something and see what they're saying. What's the party line? Hopefully they would be honest with you if changes are afoot. Now, if you're a seller, pricing your house well really matters more this year than it has for a while. Sellers across almost every market that I track are still getting close to full asking price, sometimes exactly full price, when they price it right from the beginning. This is a harder conversation to have right now because a lot of times the automated home value estimates you'll see on Zillow or Redfin tend to run high in our market. They almost always do. So don't anchor into those numbers. Anchor into what is actually selling around you. If your agent offers, like I always offer for sellers to come and do secret shopping with me, pretend we're a buyer, go out and look at 5 or 10 homes for sale in the neighborhood, and it becomes a lot more clear what buyers are looking at and how your home compares. If your neighborhood happens to be one of the softer ones right now, like parts of the east side, getting the sales number right on day one matters even more. So this is where things stand here in the month of August. If you want to talk through what any of this means for your specific situation, whether you're buying or selling or just trying to figure out your timing, again, my booking link is below the video. Feel free to call. It's a no pressure call. I just do it to be nice. And let me know how I can help. I live where you live. I keep an eye out on these things, and I just want all my clients to have the best experience possible. And for me, that starts with education. So let's figure out what's going on in your neighborhood and let that inform your decisions moving forward. Thanks so much for watching. You can subscribe. I make these market updates every month. I'm Realtor Emily Cressey, and I'll see you on the next video.